learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in at July 31st, 2020, and the stock market is going to go crazy. A lot of things happened. The main event, Apple did a stock split on earnings, and the big kahuna beat across the board. Every single FANG stock absolutely killed earnings above and beyond expectations in some areas, really surprising. And then there was some issues with Google and their earnings, but essentially what we got out of Apple with that news of the stock split is very, very important. Even up here on the chart right now, I have the S&P, but in 2014, that was the last time that Apple did a stock split, around April. I think like April 23rd. So market was interesting. We saw the oil crisis and volatility follow after. Again, that's 2014. So this was very interesting. Again, all of the earnings, Amazon, Facebook, and then Google still did pretty decent besides one of the revenue drops. But the market is up. There's going to be a lot of plays tomorrow, a lot of continuation. And now in the broader context of what's going on with Powell, Congress tomorrow, and what we can be expecting with the stimulus bill, and then now this good earnings, things got very, very interesting. So we have a lot to talk about, but not to get ahead of myself, I got the plays, I got the keys, and we're going to go over the strategy coming into tomorrow. I hope I see you there, but let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, and watch the watch list come to life. And on Fridays, Friday Josh comes out. I'm really excited because tomorrow is going to be a lot of fun. So hopefully we see you there, and be positive and respectful. And I love you, and post the plays and source that info, and be very, very careful with a lot of things. Actually, so right off the bat, that's Uncle Answers on Spotify, but we'll get to the keys. You see Uncle Answers on Spotify. He loves you. But no, we'll talk about a lot of stuff. I want to talk about the split, but even in the name of being careful. So right off the bat, Apple stock split. Please let me say this for all the new people. You will not make money buying a put if they go down to $100. So the stock split, especially in this case, it's very, very simple. Every one share will turn into 4 shares. So it's pretty much like taking $1 and turning it into 4 quarters. So that is what's happening with the split. The price of the stock is going to go down, but the amount of shares is going to increase. Again, $1 turning into 4 quarters. So some people have already asked, this always happens with stuff like this, but people even asked right now, they're like, if I bought a $100 put, would I make money? No, you will not. So be careful. Demand does occur before and after these stock splits, and kind of what makes this was very crazy. Again, last time this happened was 2014, and then I start looking at it in a broader context. So given our current pandemic situation, and even just the access to Robinhood and a lot of things, and now I think in pretty much in the next 30 days, by the end of August, Apple will be trading at $100. So hopefully you guys get informed and make a smart decision. Again, I'm not even a professional advisor. Nobody on YouTube really is. So be very careful. Don't listen to me. None of this is a recommendation. Don't buy anything. Even if I buy it, I'm a degenerate gambler. I'm the worst thing you could think of. There's a reason we have everything on the screen, but in all seriousness, no, get educated on what you're buying, because this event, with how it's going to play out, I think it's going to be interesting. So this is something very, very unique, but keep that in mind. Be careful with Apple, but now in the grand scope, because again, tomorrow's going to be crazy, and we're going to have plays around Apple. There's going to be swing trades and all that. So we will talk about that, but in general now, Apple will be leading the news tomorrow. So coming into the rest of the week, even though tomorrow's Friday, but even in the next week, we got to watch for Congress, and that's going to pretty much be the next key with the stimulus bill. But I feel like they might get it fixed, because if they do, and with how the earnings perform today, that's just very, very bullish. So they'll do good. So I posted this on my Instagram. I feel like Powell knew, man, because this is the best play action in the world, because all we could do is just cover the points. I mean, depending on what information comes out and how Congress reacts, that's what we know Fed will react on. But until then, this is very, very bullish. Now, this morning, the market was a little bit weird. I mean, we are not even above. It took us till after hours to get above today's close. We were down a pretty decent amount. It was like 500 points at one point. So the day was pretty interesting. So that was off of the jobs report, but keep that stuff in mind. And now that's what I'm saying in the broader context. This might add time to some of the theories. Again, Apple, this is just a very, very bullish thing. And again, every single earnings now did good. And that's now the main point. It was kind of the big kahuna sandbag. I think all the estimates were even low in the first place, or again, genuinely 3 months ago, a lot of people just didn't know what was going to happen, but everybody beat. Again, Google had a historic, because it's never happened before. I think they did a revenue loss for the first time ever, but everything else wasn't that bad. But again, all in all, the overall performance was really, really good. So the market liked it. And then now this Apple split came out of nowhere. We're going to see. But again, before and after the split, it's going to draw demand. And I think that's enough. Again, with all of the earnings now tomorrow, we said this today, all of the big earnings plays have happened on continuation. So we'll talk about the plays now and the strategy, because get ready for tomorrow, get ready for next week. And at the same time now, watch the premium. I will say that for sure. Although there was some big moves today, again, you could see how it kind of will deflate in the morning, or how the options move. That has really been the dagger with some of these earnings. So even though some of these puts should theoretically get clapped tomorrow, the ones that I got, the difference is the calls may not even go up that much either. So that's something we got to look at. But we have even some good information from the earnings today to know how to play tomorrow. It is going to be a froggy Friday. So I hope you guys are ready. But that is pretty much it. Stay safe, stay careful, keep your head in the game. But let us get into the plays. So right off the bat, it is going to be very, very simple. The continuation weekly quick flip. So we did one today on Coca-Cola, but we saw what happened. Again, there was an interesting move with UPS with their earnings play. There was a few, even Qualcomm. So we did it with AMD, but we got to learn from it. I missed them today, but we really got to hit it. It was pretty interesting. So it's going to be the same strategy as that, but the key is going to be, really just setting a budget. You guys have to understand, it really is going to be a gamble, and probably a lot of the move will happen in pre-market, or the first like 2 hours, and then kind of a little bit in the last hour too. But it really depends on the reaction. So this was overall good, but I wouldn't be surprised to see this take a few days. So there's going to be both the weeklies and then the next weeks as well too. But pretty much Apple, Facebook, and any of the ones that reported, that's what we want to look at. But now let me show you what I'm talking about here with the UPS. Well, here are the Qualcomms. We could start with some of them. And now again, we were kind of looking for them to get pretty much cheaper off the morning like we talked about. But in this case, it took about 30 minutes, and then now Qualcomm had a deeper chain, but you could even see based on the open interest, not all of these contracts were around for too long. So in this case now, the contracts that really were actively traded off of the morning, they were at 9 cents. They were already up like 100%, and that's like for the 110. And I think what was Qualcomm at in the morning? Yeah, they were like 102. So these are like 1 day of time left, still up 100%. I remember looking at this in the morning. They were just still fairly expensive, believe it or not. But at the same time, you could kind of see it wants to frog, but it even still hasn't frogged despite the move. So you could kind of see it wants to close, but it's like creating a frog within a frog. So that may not make sense to all of you. We have a video on the frog. You should look it up. But at the same time, the idea here is looking for these plays that get cheap in the morning. Now we saw it off of UPS. But now the difference is on UPS. I mean, let me go to the stock actually. So they were at 123, and then they opened up at like what, 138. So you'll notice the chain, if the stock was at 138, even on the weekly, there wasn't too many options to buy. Now these were still at 48 cents, but from the day before, these options were up at like $1. They were up like 400% pretty much in the morning. They did. Oh man, did they come down to 20 cents? No, yeah, they came down to like 50 cents. So they were still, it was still kind of expensive, but I didn't look at the weeklies this morning, and this is what I'm trying to show you guys. This is what we're going to look for tomorrow for them to get cheap and go up. But the difference is they'll decay harder if they're not in the money by Friday. So the problem I looked at today is that if you go to the August contracts or September, they were all really just a lot more premium from the morning before. That was my kind of worry in the morning, no matter what. These were like 11 cents. They were up like 400% in the morning throughout the day. Then they kind of came down when they got down to like 200%. They weren't as appealing. They shot up, and then you see how they came down. So this is even what I'm saying with a lot of the plays we made today, and even kind of the expectations coming in tomorrow. The premiums are moving weird, so we'll have to see. But the idea here now, any of these companies that reported, Apple, Facebook, Amazon, especially Apple, the idea is going to be trading these in the morning, play that first 10 to 30 minutes to see how it moves around if there's a move, and then play the continuation, play the direction on which it's going to go. In this case, I think they're all going to go up, but we could still be surprised. So that is the strategy and the plays I'm looking for tomorrow. As far as everything else, here were the plays we made, and you guys could kind of see if you even watch towards the end of the day when I executed this trade. So at like 3:30, 30 minutes before close, I got a July Amazon weekly 2630 put at 75 cents. I was pretty much explaining the logic that we had old puts from a few weeks ago. Remember, we got clapped on the earnings run up. So we played these earnings plays. Remember, I played Amazon August 21st, and what was the idea? Spend a lot of money. Earnings comes around, the premium is supposed to go up, and we flip out, get the initial investment. But what happened? We were up for like a day or two. Didn't take profit. We had the opportunity. I got greedy. I didn't take it. A lot of you did. I waited too long. It came down. We got clapped on those plays. So now I already spent the money. So I was like, well, in this case, and now even though they went up, this is why I'm going to look at the calls tomorrow. If the calls don't go up 1,000%, I really won't be pissed too much, and I don't think they are, because even Amazon, although it's a big move, $180, this is exactly what we said yesterday on the watch list of what is expected to move. So it fell exactly within line. So that means contracts will break even and nobody makes anything. So the idea here is that if there was a very, very big miss, there was a lot more room down rather than kind of moving with expectation. The only real surpriser was Apple, and then I think did I get Apple puts this morning? Yeah. Oh, no, I didn't on the small account, but I did it on the bigger one. You see, I have a little bit more money. You're prone to take some bad trades here, but I said I'm going to keep it small. So even in this case, I bought now the weekly 352.50 puts at 32 cents. So the idea is spend $60, not spend too much. In both cases, I got weeklies, contracts that expire tomorrow, because that's where we've seen most of the moves. And the idea was, well, I have time on the other ones that we got. Pretty much I'm still holding the bag on the ones we got burned on. So the idea was get a little bit more bang for my buck, that if I could gamble on the weeklies, not spend as much, because I already spent a lot more and got burned, I could get closer to the money. If there was a big surprise, I'd profit off of it more, but I'm taking more of a risk. But I already took a big risk already. So I really wasn't expecting too much kind of from some of these earnings. That's why, again, it's reflected. I did 2 weeks ago, but once the premiums and everything shifted, it was kind of clear after the first few reports that it was going to level out. But we still got a little bit of surprises, Apple and Facebook today, but that was the other play. Then we grabbed a Zoom put. This play I got August 7th. I was scared of this because Zoom always just bounces up. And yes, this is what I'm saying. So, I mean, I put $40 on it, but it's just like burning money every time. Because, again, I say that because we've tried to play all these news events. They got hacked. It moves a lot. It's a very volatile, prone company. So, we're up 100% on this play at one point. Didn't take profits. I'm still holding it. Got it for next week. But the idea is it doesn't go down because they were the ultimate winner of the whole virus pandemic trade where you benefited from working at home. Again, they came out of nowhere. Everybody used Zoom. They were the real winner. They are the epitome of it. So it's kind of hard to bring them down there, but that's why it's kind of lucrative. It's kind of like Beyond, or Tesla, but when there's, when it's strong, but you will see. So we got that play. And then finally, Coca-Cola. Coca-Cola is getting into a White Claw industry, the seltzer. We call them Coke Claws. They came out with that news. The stock just started going crazy. So I wanted to do it. I was like, well, that's pretty good news. And Coca-Cola was moving pretty active. Again, I believe this was their earnings. So, or was this their earnings? You could even just compare even the two, though. It was a pretty large move, and given kind of what was going on, I thought it could move up good. So, like the momentum, we bought it on a quick flip. It was tripping me out. It wasn't show. I was like, why? It says this call was canceled. It doesn't show we got filled on this one, but did this play, went pretty big on it. I got 40. I think I ended up spending like 11 or 12 cents. Spent about $400 on it. It shot up, got it at 11, 12 cents, went up to 19. It was up at like 22. We were trying to play it, but we did the same thing we did yesterday. And now this is what we want to do tomorrow with these earnings plays. You could see why. This is a weekly. It expires tomorrow. But if they did do good, we'll profit off of it. I bought 40, spend $400. It shoots up. I was able to sell 30 back at 20 cents. Almost got like $600 for that. So I made $100. And now I have 10 free contracts remaining. So that is going to be the idea with all of these continuations and strategies. But that was the other play I made today. And then finally I was trying to get those Septembers. You guys can even see the UPSs in the morning at 35 cents, but it started going too crazy. So I said, nah, I'm good. But the final play, I got one on this account, one on the small account. Facebook, July 31st, 200 put. And again, this was the idea. You guys were, if you were paying attention, really listening with the earnings, there's a reason on some of these plays, especially compared to 2 weeks ago, why we scaled down dramatically. One, already positioned. Two, Wall Street's expectations really changed greatly, and we already got to see some of the earnings. And then now, too, I put $20 on even this bigger account, and then I did $20 on the Robinhood, but just kept it super small. So that is pretty much it for those plays. The main thing moving forward tomorrow is going to be all of the continuations. I'm really going to be excited for it. Be careful, be nimble, be quick. I would say if you're going to trade the weeklies, again, I'm going to look for the ones for next week. There will be higher risk, higher reward in the daily. So again, if you're on Robinhood, you can't trade it. But overall, be careful, be safe, be ready. I will see you in the morning. There is going to be a frenzy over the next few weeks. Be careful of Powell, the pump fake, everything. I hope you're ready, ladies and gentlemen. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you in the game ready for the earnings and the responses. It's been a continuation season. You've seen it. You guys have executed good at times, even better than me. So you guys see the opportunity. Be smart. Control the balance. Control the cash balance. Use the patience to your advantage. And don't forget about the long term. But the code loves you. I love you. I'm going to see you in the morning. Let's go.